Hello, 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 beautiful and amazing people. I'm so excited that you guys are here. Welcome back to a master class hosted by Seven Ways to Wealth and yours truly. So today we have a very phenomenal master class scheduled for you guys. So one of our educators, Mr. Brian Dorsey, the founder of the funding playbook, is here to educate us, and he's here to teach us everything about OPM, other people's money, specifically the bank's money. How do we get the bank's money? How do we get funding for our entities so we could leverage that and we can actually get these assets, meaning acquire assets and build wealth, right? Listen, the banks, they are building wealth off of the money that is being direct deposit into your bank account. So you need to do what the bank is doing, and you need to borrow money from them so that you could build wealth and acquire these assets. So Mr. Dorsey, he has been in this field and he has been in this field for over a decade. So he has a lot of experience. He has helped entrepreneurs and business owners raise millions and millions and millions and millions and millions of dollars through the banks. He has all these phenomenal banking relationships, and he's going to teach you step by step how to get the money. So I'm super excited that he is here today because you guys are going to be blown away. So thank you so much for being here, Mr. Dorsey. We appreciate you each and every time you shave off a little bit of your schedule so that you can actually be here with us with the Seven Ways to Wealth family and the Wealthy Trusty community. So thank you, thank you, thank you so much.
Good
You
evening.
have,
Good evening. Can you hear me?
yes, perfectly.
All right. So, welcome. Well, first of all, thank you so much for having me back. I love being here. We're talking about wealth. Like we are talking about building wealth, and the key to building wealth is leverage, right? So, like Christina teaches you how to establish a trust, and again, that's a form of leverage so that you can take things out of your personal name and put it in the trust, right? So all I'm going to do is show you another form of leverage. Just like she said, showing you how to leverage other people's money in the intention to grow your business and build your wealth. So ultimately you can purchase assets, create cash flow, all of these different things that, just like she said, the bank is doing. We have to start thinking like the bank if we want to start operating in a true capacity, right? They always say, or we always hear, follow the money, follow the money, follow the money. What is the money doing? The money is leveraging our money and other people's money to do the same thing, right? So that's what I'm going to really break down today. Always a phenomenal time to be back. I always try to enhance, make things better, make things clear, set all of the expectations up front so that we can actually get things done. I am a visual person. The first thing that I always try to preface if is this. I have been in the industry a decade. I've seen the great things, I've seen the bad things, I've seen the ugly, I've seen the factual things, I've seen the things that are, wrong. So I always want to preface this with this. If you know what funding is, if you don't know what funding is, I always try to drop some kind of information in order to help you really understand how this works. The first thing I need you to understand is that this is absolutely possible. A lot of times, whenever we talk about other people's money, and leveraging banks, we have to understand the belief level that it is possible to us. I need you to understand that banks and lenders are in the business of lending money. It is up to us to know how to actually position ourselves to access the capital. So today, whether this is your first time getting funding, whether you've been funded millions of dollars already, whether you've heard great things about funding, whether you've not heard great things about funding, all my goal is to do today is break all of this down for you to make it really simple, really digestible, and take this complex topic and how do we get to actually to the points to knowing what we have to do today. So everything that I'm going to go over today is really an implementation class. I want you to know by the end of this class, I want you to know where you are and ultimately give you opportunity so that you know what your first step to get funded actually is. So now that that's out the way, like I said, I do have a visual presentation. And what I'm going to do is I am going to share my screen. Everyone should see my screen. You should see something that says the Funding Playbook Business Funding Masterclass. Can somebody do me a favor and put a 1 in the chat if you can see that? Just want to make sure that we see everything done. All right, see some ones in the chat. All right, perfect. So I am someone that likes interaction, right? I am a energy person. I love doing this, but I like to talk to people who are, actually active because again, I don't want you to leave this call and just say good information. I want you to leave this call and actually know what it takes to get funded and how you can actually access capital. So just like Christina said, we have relationships. Most people, when they think of bankers, they think of, maybe 5, maybe 10 banks that they might see online, a commercial, or in your local community. What I want you to understand is there are over 4,000 lending institutions, lending entities in the United States alone, right? So the reason that I say that is we work with a lot of these industries. We work with a lot of these banks. We work with a lot of these lenders, right? So the reason that this is important is because when we talk about business funding, we talk about what is actually applicable. So something we always say is it's trusted by bankers, built for founders. A lot of business owners have a business that has a lot of potential, but they don't necessarily know how to actually position it to access capital, right? And I want you to understand that this process that we talk about is fulfilled and done over and over again, and it's trusted by bankers, right? Now, I do have a disclaimer. Everything that I'm going to give you today is valid, factual information, and it is applicable information. However, if you've ever seen any of my classes before, you will always hear me say, in all of my years doing this, there has never been 2 funding deals the same. So it's great information, but understand that everything in funding is going to vary based on your particular situation. Funding is very, very specific. There is nothing random about funding at all. There is a reason for everything, whether there is a reason that clients are getting approved for funding or whether there is a reason that you may not be getting approved for funding, right? So understand this presentation is great for general educational purposes only. It does not constitute legal, financial, or professional advice to your specific situation. You want to always consult a qualified professional for guidance specific to your situation. Now, something in funding, we can never guarantee funding. However, by following these strategies here, you are going to help position yourself for the highest probability of an approval and how to actually position yourself to get access to capital. So before we begin, a couple things I want to cover, kind of covered this a little bit previously. If this feels overwhelming, if you love funding, if you hate funding, if you have no idea what funding is, it is completely okay. It is completely normal, right? That's perfectly fine. That's why we are here today. That's why I'm very passionate about what I do, because I want to give you the most applicable, up-to-date information on how to get funded today. That's important for me to break down too, because funding changes and it changes. It is an industry and a landscape that changes very, very fast. The reason I say that is because the way that you get funded today is not the way that you would have got funded 6 months ago, a year ago, 2 years ago, right? You have to have access to someone who is in the field day to day and giving you up-to-date information on how you can actually get done, right? So today, I want to make sure that you get clear, simple actions. Number 2, you don't need to be an expert, right? Just follow the process. Some of these things you may know, some of these things you may not. Like I said, my whole objective is anytime I teach to show you new things about funding and updated strategies, right? So you don't have to be the expert. All you have to do is follow the process. Something about me that everyone should know is that I'm never going to tell you something that I think is possible. I'm only going to talk about things that I know for a fact, right? So, number three here is because of that, I want you to see real examples that you can actually apply immediately. And I will clarify this ahead of time. If you have any questions, if you need any clarifications at all, please write those down. I always do leave time at the end to answer those questions. And always, no question is a dumb question. So now that that's out the way, who am I, right? Now, I have been a part of the community for years now. I've been working with Christina for, man, 5, 6, 7 years now. Time really flies. So maybe you've seen some of my content in here. Maybe you have not. Maybe this is your first time meeting me, right? So I just want you to understand, again, who I am and why I deserve any portion of your time and why this is going to be, in my intention, one of the most valuable calls, if not the most valuable call that you have this year, right? So who am I? I am a credit and funding expert. I've been in this industry almost a decade in the funding process. I've actually dealt with like personal credit, business credit for over a decade. So really since like 2013, 2014, got into lending the end of 2016, beginning of 2017. So again, I'm an expert. I've seen great things. I've seen bad things. I've seen a lot of scenarios that are necessary for you to actually get funded, right? So there's been some easy processes. There's been some things that we had to be a little bit more strategic about it. The reason I say this is that, just like I talked about earlier, in all my years dealing with credit and all my years dealing with funding, there's never been two deals the same. So it's important that you work with tailored funding solutions for entrepreneurs and businesses that are actually catered to your specific situation. We're going to talk a lot about products. We're going to talk about certain, qualifications, and not all products and not all funding is going to be applicable for you or your business, right? I'm also a business growth specialist. I manage a 7-figure consulting where we are focused on streamlining and taking this complex process and making it really simple for funding and asset acquisition. And I am also a strategic negotiator. Getting deals done is very creative. It takes a lot of creativity sometimes to get things done. And sometimes the way that people assume funding gets done is really not the way funding actually gets done. And we are experienced with negotiating with bankers, lenders, and investors alike. Now, why business funding? Why do I talk so much about business funding? Why should you even consider business funding, whether you have a business already or whether you're looking to start up a business? So the number one thing that I like to talk about here is, when you stay ready, you ain't got to get ready, right? And we hear that a lot, but it's important to understand that with funding, and you're going to understand a lot of it as you go through this process. The first misconception that I really want to knock out is that most people think that funding is just submitting an application. They think that that's all it is. And if you've ever seen any of my trainings before, I used to say most of the work was done prior to ever submitting an application. Really, what I've been saying all year, especially for 2026, is that all of the work is done prior to ever submitting an application. And the reason I say that is because smart founders, I don't want you to operate like these regular, everyday business owners and entrepreneurs that we see who are trying to figure it out. I want to position you to operate like a smart founder. And what smart founders do is they don't wait until they need the money to start trying to put themselves on this journey. They're going to position themselves to access capital before they need it, right? And there's going to be a couple of reasons why that you're going to learn as we go through this process. But why is business funding even applicable, and what is the real value with leveraging business funding? So number one, leverage. It gives you and creates leverage for you to leverage other people's money. When you do that, it allows you more access to capital, which ultimately you can invest or deploy the capital in your business how you best see fit. Now, a couple of the biggest things or focus points here is it's going to allow you to grow faster. If you have more access to capital, you can invest into things like marketing. You can invest into creating systems for your business, and you can also, as your business grows, you can bring on staffing that actually helps you scale and service your business. So growing faster is one. Number two, the biggest thing for why I love business funding is leveraging other people's money to purchase assets and create cash flow. This is why I love OPM. This is why I'm very passionate about leveraging OPM, because it truly changed my life and gave me a lot of opportunities that I was not aware of prior to getting the information that you're going to learn today. I've personally done these things, and I've helped a lot of clients leverage capital in order to acquire assets such as real estate investments, heavy equipment, or one of my favorite strategies, actually buying a whole other business entirely through business acquisitions. The number three part is investing into yourself. Congratulations, you are a part of this community. You've already invested into yourself. So that's one of the other things that we can leverage, is investing into things like education, masterminds, and mentorships that actually sharpen our edge and also help us find other opportunities. And then, of course, OPM, you want to protect your cash and scale without draining your savings or maxing out personal credit cards. So I work with both established business owners. I also work with startup business owners, right? So one of the things that I see on both ends, again, just because they may not have had this information, is that a lot of times they're either using their own cash, their own savings, or they're leveraging their personal credit cards actually to grow their business. So a lot of people do these things just because they're not aware of business funding and how it actually works, right? So that's my objective today, is to show you the opportunities and make you aware of the opportunities that surround you every single day, right? So the problem here that business owners have whenever they're looking for access to capital is that most business owners get denied, but it's not because they're unqualified. It's because they don't know how the bank thinks. And just like I talked about earlier, the first thing we have to do is we have to start thinking like a bank, and we have to start operating in the mindset of the way that the bank or the lender is going to look at us, because now we can reverse engineer their system and align ourselves with what they're actually looking for, right? So most people, because they don't get information like this, most people are applying randomly without a strategy. They just thought, hey, I saw this bank, I saw this social media, I saw this YouTube video, and I'm just going to go on and I'm just going to apply because they said they're giving out a lot of money, right? And the problem is that, again, just like I said earlier, all the work for funding is done before you ever submit the application. So if you're applying without a strategy or without a purpose, well, you've already done one of the biggest problems that most other business owners are doing. And if you operate like most other business owners, then you're going to get the result that most other business owners actually get, which is, again, not the result that you're looking for. Number two, another primary reason that business owners get denied is because their personal information or their business information doesn't actually match across records, right? So here's the second thing we're going to knock out. We're talking about business funding. Why does my personal information matter when it comes to business funding, right? So this has been a really popular topic that we've dealt with specifically for 2026. So let me just kind of clarify this. Yes, we are talking about business funding. Yes, business funding is absolutely possible to acquire. However, remember, generally speaking, most people, what people kind of think sometimes is they say, hey, I'm going to get business funding, so my personal information and my personal credit doesn't matter. Let me knock that myth out now. Yes, it does, right? And we're going to break down different comparisons or help you understand this as you go through the process. But generally speaking, yes, your personal information has to match up. And yes, even if it's for business funding, in some consideration, some lenders will have more of a value on personal information or personal credit. Some lenders will have less. However, your credit or your personal information will, generally speaking, always come into consideration as you are looking for business funding. And yes, the number one thing that banks are fighting is fraud. The banking system in modern day is a computer. It is a computer system. You have to understand that, right? Because it's all about data systems. So it's an automated process. If your information does not line up exactly across all of the credit reporting agencies out there, then you are not going to be identifiable. And if you're not identifiable, then your application will result in a denial. Doesn't matter how great your profile is, doesn't matter how great your business is. If your information doesn't line up, you didn't even pass phase one, nothing else even came into consideration, right? Very, very important. Number two, they have no real business presence or structure. If you want to get business funding in 2026, you have to have a real business. That real business has to be set up to operate like a real business. If you have an LLC, if you have a corporation, congratulations, you got your business trust set up. That's great. However, just because you have it set up does not mean that it's set up to actually be bankable, right? So that's important. They don't know which banks to approach and when. Again, everything is very strategic. Everything is very important about timing and what you have to understand in funding. A lot of things that we assume are not applicable to funding are actually applicable, and they actually impact the result of the funding that you're looking for a lot more than what you think, right? It's literally, in what I've noticed, it's the small things that knock people away from funding or get them denied than it ever is really the big or obvious things, right? And then the last point here, the problem is that they're going to burn inquiries over and over and get denied. Again, everything has to be very strategic. Just because you hear some information online does not mean that that is applicable to you. And we're going to talk about different banks. We're going to talk about different products and why you have to know this as you're going through the process, right? Now, the next part is the solution. So we understand the problem. Now we want to understand the solution because we don't want to operate like everyone else. We want to put ourselves in our own lane so that we can actually speak the bank language, right? So the solution is, just like I talked about, we have to think like a bank. And the next thing we have to understand here is that your business might have great potential. You might have great potential. However, the bank does not lend on potential. They lend on predictability, right? So what does predictability mean? It means when your file looks organized, when your history is clean, and when your business is structured properly, getting approved becomes the expected outcome because you're going to put yourself in the highest probability of actually being able to access capital, right? So what does that mean? Clean history. You want on-time payments. You want low card balances to show you are reliable. Number two, you want consistent information, just like how I talked about a second ago. Your name and your address needs to match everywhere. And yes, this is what I want you to understand. If your name is Bob Jones and everywhere else you have Bob Jones as a first and last name, but then let's say on one of the reporting agencies you have Bob A. Jones, you have to realize you're not the only Bob Jones in the world. And you're definitely not the only Bob A. Jones in the world. So if your information is mismatched, well, then the bank and the lender and the system can't actually verify you, right? So it's very, very important that you understand these small, minute details, even off to the letter, initial, spelling of your name, whatever the case may be. It can pose a real problem. And I'll actually give you a scenario that we had recently. We were working with this couple. They recently got married. And on some of their reports, they had their updated name, and some of the reports, they had their maiden name. And the problem was that because of that information was mixed up, they were going to all these lenders, they were going to all these different things, and they couldn't figure out, hey, I've got great credit, I've got this, I've got that. but they can't get funding. And they didn't realize that it's literally just because they just got married and some of the information was updated and some of it wasn't, but because it wasn't matching, they weren't able to get verified. So it didn't matter that they ran a very successful business because they weren't actually able to get through the first layer, right? The next part, you do have to have a real business. Again, you have to have a professional structure. You have to have the proper registrations and a real presence. And everything, you have to have a strategy. You have to apply at the right banks in the right order at the right time. And the smallest misstep on this can be a significant difference in the amount of funding that you actually get. So I know I'm kind of speeding through this. Let somebody do me a favor and drop a 2 in the chat if everything is making sense so far and you are getting value as of yet. Just do me a favor. Let me know you're still here and drop a 2 in the chat for me. Appreciate you, Henry. All right. Thank you, God. All right. Boss your life up. Edgar Pete. All right. Thank y'all. Thank y'all. Okay. Perfect. So now we're going to actually make this look and make this make a lot more sense, right? So again, we have to start thinking like a bank. So 2 borrowers walk into the bank. You got borrower 1, you got borrower 2. Now, before I break this down, whether you're borrower 1, whether you're borrower 2, whether you're somewhere in the middle, as of right now today, that doesn't matter. The most important part for you to understand when you leave today is exactly where you are and what you need to do. It's not, maybe you didn't have this information, maybe you didn't understand the importance of this process prior to today, but I want you to understand the importance and the value of this today so that we can actually get corrected and you can actually position yourself to capital. So it's not about where you are today, it's about where you're going, right? All right, so now let's talk it down. So borrower 1 walks in the bank, they've got recent late payments, their cards are near the limit, their address doesn't match. When they're asked for a use of funds and what they want to do with it, they have no idea. When they're asked for their documents, they're scattered. And the result of this file looks uncertain. And you would be surprised on how many borrower 1s see a video on social media or on the internet or whatever the case may be. They think that they're qualified because they got some general information that's not applicable to them. And they run into this same scenario over and over and over again. And borrower 1 eventually starts to think that, hey, funding isn't actually possible. It is. They just didn't know how to position themselves, right? So now let's look at borrower number 2. Borrower number 2 walks in the bank. They've got a clean payment streak. They've got low card balances. Their name and addresses match. When they're asked for what they want to do with the capital, they know exactly what they're going to do. They have a growth-focused plan. When they're asked for their documents, their ID, their business docs, they're all organized. And the result of that is that it looks predictable. Remember, banks do not prioritize or lend on potential. They lend on predictability based on who actually has the financial responsibility, right? So those are the difference between the 2 borrowers. Now, how do we actually position ourselves to access capital, right? So now let's take it back to the beginning. Remember, generally speaking, for most applicants, your personal credit is going to come into some form of consideration throughout the process. Just like I said earlier, some banks are going to prioritize credit more over others. Okay, that's fine. We can find some strategic ways, but I like to position you so that you have options. We don't want to just pick up the scraps for what we, can get. We want to position ourselves so that we have the most options so that we can pick and choose what we want and not have to really rely on what is just given to us, right? So when you start to think like this, you also have to understand when most people think about funding and they think about credit, they think that only the credit score matters. And I'm going to tell you today, I've said this for a long time, it creates a lot of engagement and some feedback, but the credit score doesn't really matter when it comes to funding. It is only, in my opinion, about the structure of your profile. So let me break it down. There are 3 major credit reporting agencies that we're going to talk about. There's a lot more, but we're just going to talk about 3. TransUnion, Experian, and Equifax. Most people, when they think about credit, they think of, hey, I have credit scores with TransUnion, Experian, and Equifax. That is false. They are data companies. They are individual, privately owned data companies. And what they have is we don't have scores that are stored with those agencies. We have data. And based on how that data is organized within that particular system or algorithm, then that data produces a score. So we don't necessarily just have scores, we have data. And based on how we organize that data, that's what actually generates the score, right? So the data is something that we can manage. We can't control their algorithm on how they calculate our data, but we can control the information and data that's being reported on our behalf. But we have to understand what we're looking for, right? So number one, we have to have good payment history. Lenders and banks are absolutely in the business of lending money, but they want to lend money or capital to those who look financially responsible in order to pay it back, right? How do we signal to the bank that we do that? Well, we're on our credit reports, it's going to show that we pay every bill on time, and we have a clean recent streak that shows reliability, right? That's number one, payment history. Number two, it's important that you understand these data points. So again, this is why smart founders prepare themselves for access to capital before they need it, because we have to understand this. Banks are in the business of lending money, but they like to lend money to applicants that don't look like they need the money. So how do we do that? How do we compute with it, communicate that through a computer system to the banks? And it's important that we understand this data point. You want to keep your cards. If you have credit cards, you have revolving accounts. Revolving accounts. You want to keep those balances low. So let me make it simple. It's something that we call utilization. Utilization, in very simple terms, is the amount you are using versus the amount of credit that you are using versus the amount of credit that is available, right? So let's just use simple math. Let's say I have $1,000 credit card. If I'm using $300 out of that $1,000 credit card, that means I'm at 30%. If I'm using $500 of that $1,000 credit card, I'm at 50%. $800, 80%, $100, 10%, right? So again, another misconception here is somebody says, hey, I've got this $1,000 credit card. I can use this whole credit card because I have the available limit. Yes, you do have the discretion to use that available limit if you want to, but the more of that account that you use at the time of funding, then the banks start to think, hey, this person needs the money. So how do we signal to the bank that we don't need the money? A key data point that we want to stay under is 30% utilization of whatever our credit limit is, right? Very, very important. You want to be under 30% minimal. Ideally, you want to be between 10 and 20%. Now, the other thing that I want to make sure, because sometimes we work with applicants that have great credit, they have no utilization. Let me mention this. When you are looking for additional access to capital, lenders want to see that you're actually going to use it. So some of our applicants, before they come to us, they think, hey, I'm going to use my credit and I'm going to pay it all off and never show a balance. However, what that shows the banker or what that shows the lending institution is that you might not use the credit that they have, right? And so what's important that when you're looking at credit, you never want to have a 0% utilization. Minimally, I would say 1%, but a healthy balance for the bank for optimal position would be 5 to 10% utilization. So again, because there have been times that, again, great credit clients have come to us, they've got no utilization. They're like, hey, I've got great credit, but I'm getting low limit approvals. Why? Because the bank doesn't think that you're actually going to use the money. Remember, it's a leverage system. We have to understand, how do we get the banks to work with us? Okay, well, how do banks make money? They make money on the balances that we have that are left over. So if the bank sees that you're paying off your balances in 0% every month, they're thinking, hey, I can't make any money on this person. You have to give a little bit to get a lot. I'm not saying go and carry huge balances, but I'm saying if you pay off 0%, a healthy balance is 5 to 10%. You show the bank that they can work with you so that you can work with them, right? This is how this works. It's a give and take relationship. Life is about relationships. Business is about relationships. Banking is absolutely about relationships, right? So you have to understand that. Number 3, matching information. I cannot say it enough. Your name and your address needs to match everywhere on your bank's information, on your credit reports, and on your IDs, right? Very, very important. Now, there's sometimes I work with clients, they've got multiple residences, right? Okay, that's fine, but you need to have one that is your primary. Because if you start showing multiple addresses, then now it looks unstable to the bank and they start to think, hey, I don't have a consistent place to contact this person. So again, it starts to raise red flags. So it's very important. Number 4, account age. The older your history is, the older your accounts are, the more experienced you are. So you want to make sure that your account age is there. And when you're looking for funding, again, it has to be very strategic. It's not to say that you can't have new accounts. It's just to say that it has to be positioned a certain way strategically, right? So you don't want to be opening a whole bunch of new accounts before going to actually apply for funding, right? Very, very important. Number 5, limit inquiries, kind of goes with along with number 4. Too many applications in a short period of time makes you look desperate. This is not about being desperate. This is not about submitting the most applications possible. This is about being strategic about submitting high probability applications that line up with what we're looking for, right? And number 6, just like I said, when you stay ready, you ain't got to get ready, and you must stay organized. You want to be prepared and experienced when you are talking to the lender. So you want to have all of your documents ready for both you and your business organized before you ever walk into a bank. By the time you're walking into a bank, by the time that you're submitting the application, everything else needs to be organized and prepared so that you can position yourself the right way, right? All right. Now, let me get a sip of water. We're going to break something else. So when I consult, when I do these trainings, I can only consult on what I do personally and what I've helped other clients do, right? So again, I know that this is a trust class. Christina Teaches You is the best educator I know and one of the most accessible educators I know, especially when it comes to building trust, right? So you need to understand how valuable being in this community is, because in my opinion, Christina really be undercharging, right? So you are blessed to be in this community. Now, the reason I say that is because the way that she teaches, the way that I learned through Christina was learning how to build private trust, right? Now, there's a reason why she teaches private trust, and there's a reason that I want to use private trust, right? Now, because of that, when I operate or when I use private trust, I can only teach you from my perspective, right? So from my perspective, if I have a private trust, I want to keep that private trust private. I don't want the private trust operating in the public. So me, I'm going to use a different instrument or a different entity when I'm operating in the public, right? So this is what I do. I leverage public entities such as LLCs or corporations to operate in the best interest of the trust, keep the trust out of public record, and then me personally, when the public entity acquires assets, then we go through a process where we convey or transfer those assets to the trust, right? Christina teaches you how to do that. I'm not the expert at it, right? I can just tell you what I do. But the reason I say that is because I'm going to teach you how we leverage LLCs or corporations to operate in the best interest of the trust when we are operating in the public, right? So when I say that, the very first thing that you have to do is you have to register your business. Every state has what's called an office of the Secretary of State. In this office, this is a public record for where you will go and monitor your entities, right? So every state has a Secretary of State. You go to that individual Secretary of State in order to establish your entity, whether it's an LLC, whether it is a corporation. You have the full discretion in order to choose how you want to operate, right? Then you're going to get your EIN from the IRS. Christina shows you how to get an EIN for the trust. Very, very similar process when you go through and get an LLC or a corporation. Please, I always say this, please don't pay for the EIN from the IRS. It takes you 3 to 5 minutes to get an EIN and you can have it immediately, right? In my time, I've seen people pay $100, a couple $100, $500. I've seen people pay up to $1,000 to get a business EIN, and it honestly just doesn't make sense, in my opinion, right? So you want to get your business set up, you want to get your EIN for free. Now, when you do that, you're also going to set up your business address, and you want a real business address, right? So now, somebody says to me, hey, Dorsey, I'd love to start a business, but man, I don't want to go get a business address. I don't want to go get an office. I don't want to incur all of these expenses just trying to set up my business, right? So the best thing is you don't have to incur all of these expensive office spaces. What you're going to do is you are going to Google your city and state, and you are going to type in executive office or executive suite. What's going to happen is it's going to pop up different locations in your location or in your city for different offices that you can use. Now, we use these because we're going to get an official address plus a suite number. So when we're operating out here as a business, we have an actual address with a suite number that makes our business look a lot more professional. Even if you just started up, your appearance is as somebody who knows because you're operating like a smart founder, right? Now, the next thing you have to do is you want to get a professional email. Now, with the email, my preference is not having a business email at Gmail or at Yahoo, right? Because again, when most people think of starting a business, the first place they go is go to Yahoo or Gmail or one of Outlook or something like that, and they have one of these generic emails. So then the bank looks at you and say, hey, okay, you're operating like everyone else. We're going to treat you like everyone else. You separate yourself by getting your business email set up at your website domain. So let me make it simple. When you have a business, you can go to websites like GoDaddy or Google Domains. Those are the two that we personally use. And you can go and purchase a website. When you do that, then you can take your website that you purchased and set it up through Google Suite, and you can actually create an email at your business name. So again, for example, let's say my business was ABC Consulting. I don't want ABC Consulting at Gmail or ABC at Yahoo. I want contact or info or my name at abcconsulting.com. It looks a lot more professional than just any other business owner that's using a Gmail or a Yahoo. The next thing, you want a business phone number because again, you want to register your business so that your business is easily verifiable. Now with business information, just like I said earlier, it is on public record. My recommendation is I never want my personal address. I never want my personal phone number on public record, right? So this is why we use office suites, and you want to use some kind of business phone, something that you can Google. It's called VoIP, VoIP. They have a lot of business numbers that you can use. There's a lot of different platforms that you can use. We personally, typically, if a client's just setting up a business for being able to be verified, we use a platform called Call8. That's Call8 with a K, K-A-L-L, and then the number 8. And you can go and get business numbers from there for like $5 a month, right? Some of them are like even cheaper than that. But these are strategies that you can use to set up your business the right way, where none of your public or none of your personal information is on a public platform, and your business is actually structured like a professional business. Now, the next thing, when you have a business bank account, or sorry, when you have a business, you need to open up a business bank account. I cannot tell you over the years how many business owners I've worked with who run all of the money through their personal account. That is a rookie operation. That is a rookie mistake. That is not what we do. We want to set up the business bank account so that it is separate from our personal. We're going to operate a lot more professionally. And you also need to have an online presence. Remember, the easier your business is to be verified, the easier it's going to be actually able to actually secure capital, right? So you want to have some kind of online presence, a simple website. You don't have to have this extravagant, crazy website. You can use a one-page website. It can be very simple with some contact information for you and your business. And again, you can connect that to your website. Even just a basic website is going to do a lot better for your business than when the bank or the bank asks you for a website and then you say no. Because then they start to think, they're like, okay, you have a business, but how are you actually going to conduct business, right? How are people going to find you? And one of those things that we use is, again, a website. You can use things like having a Google listing, and having things like active social profiles can enhance your business credibility and being able to find. Right now, we've covered a lot so far. You don't necessarily have to do this right now, but something that I always like to, again, as we go through this process, some of these things you may know, some of these things you may not know. So just write down some of those changes that you would make in order to make your profile look more predictable as we go through this process, right? Now, when it comes to funding, there are three paths to funding that we typically see. There is no right or wrong path. So everybody asks me all the time, hey, what's the best way? Well, there's not necessarily a best way, because again, it's going to vary based on your specific situation. I just like to make sure that you are aware of all of the available options so that you can make the best decision for you, right? So, excuse me. There are three paths to a fundable business, right? So we're going to start at the beginning and then we're going to work our way up. So on the foundational level, you have a startup. So if you have a business, maybe you just started it, maybe you're looking at, starting a business, then you're going to be in the startup phase. So there's a couple pros and cons to each level. That's why I say there's not a right or wrong, just completely depends on you. So on the startup phase, it's good because you get to build it from the ground up and you get the maximum flexibility. You can choose the state that you set it up in, you can choose the name of it, you can customize everything from the ground up as you build it. Now, one of the misunderstandings is that you have a startup. So most people assume that because you have a startup, they can't actually get access to funding. You can. There's a lot of strategies that we implement with startups to help them get access to capital. And you can do that within about 30 days of being established. But just like how I talked about earlier, the older your profile is, the older your business is, the more trustworthy it looks. So with startups, you get the most flexibility as far as a creativity standpoint. Yes, you can still access capital, but funding is easier with an older entity, right? Leads me to my next part, age corporations. Some of you may have an age corporation already, and maybe you didn't realize it. So maybe this is applicable to your situation, and I want to help you realize that of something, how valuable that you're sitting on. So what an age corporation is it is a pre-existing entity with built-in history. So for example, let's say a couple of years ago, you had this business idea and you said, hey, I'm going to go start up this business, whether it's an LLC, a corporation, whatever. And you had the best intention at the time. Life happened. One thing led to another. And you started this business, set up the LLC, set up the corporation, and maybe you just forgot about it. Maybe things didn't just work out. And, maybe you just kind of put it to the side and you just kind of forgot about it, right? Well, most people think, they're like, hey, I can't use that anymore. That's irrelevant to me. I want to change your perspective to say that, hey, that's one of the most valuable components as you go through the funding process is access to an entity that was established previously because of the years of history that are attached to it. So remember, history and older age makes you appear more stable. So the longer credit history, the longer age that a business has, the broader access that you have when it comes to funding. So you have age corporations in those scenarios that I just mentioned. Maybe you have a business, maybe you have an age corporation already. The other part, you can actually acquire or purchase age corporations as well too. And the biggest thing that the value point here is time. The older an entity, the more trustworthy it is, the more access to capital, and the more streamlined or simple it is in order to get access to capital. Now, when I talk about age corporations, they are a great resource. They absolutely work. But those are the pros. The cons are if you don't have an age corporation already and you want to get an age corporation, they're phenomenal, but you actually have to get them from a qualified source that actually knows how to source them. Shameless plug, if you ever need an age corporation, we are and we can match you with funding ready age corporations that have the history established, right? Boom, that's age corporations. Then we get over to acquisitions. Acquisitions is one of my favorite forms of leverage when it comes in business and when it comes to funding. The reason is because with acquisitions, you can buy a business with established operations, revenue or cash flow, staff, and customer relationships. So we can build it from the ground up, or we can acquire a business that already has these in place. When that happens, we fast track growth to immediate access to capital and cash flow based on the performance of that business. Now, again, acquisitions is amazing. One of my favorite ways, or my favorite way to do business. But again, when it comes to acquisitions, you have to actually work with someone who is experienced in acquisitions, because you have to be able to properly evaluate businesses and choose businesses that are actually going to fit what you're trying to do, right? So those are typically the three paths to a fundable business. Now, let's talk about funding types, because most people, when they think about business funding, the first thing that they think of is, hey, I need a business loan. I want a business loan. And sometimes, depending on your situation, that's a viable, product for you. Sometimes it's the best fit for you. Sometimes it's not, right? And so that's the other thing, is like, you can't treat funding like a one size fits all, because it's not. And every funding product is good for certain things, right? Now, let's break it down. So we're going to talk about business credit cards. We're going to talk about business lines of credit. We're going to talk about revenue-based financing, SBA loans, and term loans. And most people are only really familiar with business loans, which are term loans, or they may have heard of the SBA, but they don't really know how it works, right? So let's break down each of these and talk about what they are beneficial for. So business credit cards, one of my favorite products, solely because business credit cards, depending on the lender, every one is a little different. But business credit cards, for a bank that offers 0% business credit cards, if they have 0% introductory rates, lenders, depending on the bank, can range anywhere from 6, I've seen the highest, to like 24 months, right? Now, there's no other lending product out there where you can borrow money or leverage capital and it's 0%. Now, this was amazing. And this was an amazing solution for something that how we got our break into the industry was working with fix and flip investors. So fix and flip investors were used to traditionally by industry working with private money lenders or raising their own money, right? And when you do that, it comes with typically higher interest rates. We provided this solution that they just weren't aware of, that they could leverage 0% credit cards, use the capital from those, invest into their real estate deals and their fix and flips, and be able to access these without actually paying any interest, when sometimes they would work with hard money lenders or private money lenders, and they might be paying equity in the deal, or they might be paying higher interest on the actual funds themselves in order to get those deals done. So credit cards are great. Business credit cards are great typically for the 0% introductory rate and fast working capital. You can use a business credit card, excuse me, the same way that you can use a personal credit card. It's just the difference is the business credit cards. Now, there are business credit cards who report to the personal credit report. There are a few, but anytime I talk about business funding, I want you to get business funding that reports separately from the personal credit report. So on the flip side, like how we talked about earlier, where some business owners are using their personal credit cards and getting higher balances on their personal credit cards to grow their business, they didn't know that there's a business credit card product they can use. And now that's not affecting their personal credit utilization. So now they have a lot more freedom and flexibility on the business side versus the personal side, right? So those are credit cards. Those are what those are beneficial for. Now, let's talk about business lines of credit. Business lines of credit work almost just like a credit card. So both of these products are what are called revolving accounts. If you ever hear the word revolving accounts, all that simply means is it is an account or a product that gives you an available credit limit. You only pay on what you actually use. And as you pay it back, that credit becomes available again, right? So the most common products are a credit card. On the personal side, you'll hear a lot of people talk about HELOCs or home equity lines of credit. Those are examples of revolving accounts. Personal lines of credit, those are revolving accounts. And on the business side, they have the business line of credit. Now, something to access business line of credit, generally speaking, you have to be 2 years in business before you can access a business line of credit. So this is where that age thing matters when you're looking for what products are actually going to be applicable to your situation. So a business line of credit is another one of my favorite products. Works just like a business credit card. However, the difference is you can make cash transfers from your business line of credit to your bank account, or you can actually have a debit card that comes along with the business line of credit as well too. So the reason is it's flexible access to cash, and you draw what you need when you need it, right? Now let's talk about revenue-based financing. So there's a couple different strategies that you can use when you're looking for access to capital. And we're going to talk about this a little bit later, but there are 3 C's when it comes to credit. There's credit, there's cash flow, or there is collateral. Now, it's very important that we understand how this works. So with revenue-based financing, it allows you to leverage your cash flow or your personal income as the primary consideration for that application. Now, remember when I said earlier, credit will typically be, for most people, come into consideration for the application. There are some lenders who will prioritize credit less or more based on the structure or the other performances of your business. So revenue-based financing is 2 things. It's a quick cash injection based on your business revenue, but it's also a potential solution because sometimes we work with business owners and sometimes life just happens, and for one reason or another, they might have some challenges on their personal credit, but they've got a business that's actually generating revenue and cash flow, right? Now, most times in those scenarios, they go to a traditional bank. All the banks you see out just driving along, they go to those banks, and it doesn't matter that their business is making 100,000, 200,000, $500,000, $1 million, a couple million a year. They don't care that their business is making that much because they're primarily looking at their personal credit, or their credit comes into a heavier impact when they're looking for that consideration. So there's business owners out here who have great businesses, who has some challenges on their personal credit, and they feel defeated because when they go to these other banks, they're telling them no solely based on their credit. They didn't know that there was an option and alternative lenders that they can go to get revenue-based financing based on the actual performance of their business, right? So that's important. That's beneficial for a quick cash injection based on your business revenue. So there are options, right? SBA loans. SBA stands for the Small Business Administration. They offer loans and lines of credit. They offer products. Now, the thing about SBA, it's great, but it's not necessarily applicable to everyone. They're more applicable to larger amounts over longer repayment terms, right? And the reason is because SBA underwrites a little bit differently than what your traditional bank does. Something that you should know about the SBA as well too is that the SBA is not an actual bank. It is a program that is government backed. So there are banks who offer SBA programs. The SBA is not a bank themselves. They are basically an insurance to the bank for lending you access to capital, right? That's why they're more beneficial for larger amounts with longer repayment terms, because typically you're going to use SBA for some kind of, like I talked about, business acquisition, for some kind of like business for acquiring businesses, or when you see people purchase like a lot of commercial real estate and they finance it, a lot of times they are using SBA for those larger purchases, right? And then you have term loans, which is what most people want. When they think about funding, they think about business loans. That's more of a fixed, predictable monthly payment, right? So ultimately, when you think about funding, it isn't just submitting an application. You got to step back and think, hey, what actual product am I going to use? And why is that? Why am I choosing that product to my particular situation, right? Now, let me do a check-in. Again, I know we kind of covered a lot. I'm doing a lot of talking. I just want to make sure that you get all the information so that we can get to the point where we can actually take Q&A. So I just want to kind of do a check-in. If you're still here with me, do me a favor and drop OPM in the chat. OPM is other people's money. Somebody do me a favor and drop OPM in the chat. There we go. There we go. There we go. There we go. OPM. All right. There we go. All right. Perfect. Now we're going to transition to something that I talked about previously, which is relationship banking. Now, just like I talked about earlier, relationships matter in life. They matter in business. They absolutely matter in banking. And a lot of times, just like Christina said, the value that we have is we have relationships with the banks, right? So think about this. What you need to understand is that your relationship with your banker matters. And just like I talked about, you don't want to be treated like every other person that they communicate with or typically see on a day-to-day basis. You want to separate themselves because now you know. You may not have known before, but now you know because you showed up to this class, right? So when it comes to relationship banking, you need to set that first impression, right? So what are you going to bring? You want to bring a clear business explanation. Now, let me elaborate on this. This is an elevator pitch. This is a minute. I'm sorry, not a minute. This is a sentence, 2, 3 sentences max on a short explanation of what your business actually does. You do not want this long, drawn out explanation of what your business does. Why? Because the more direct you are, the more experienced you appear when explaining your business. Therefore, the more short and direct you are shows experience. It shows that you're used to being in this position. You're not babbling, you're not dragging on the conversation, because the longer it takes you to explain something, the less knowledgeable that you appear when you're trying to explain what you do, right? So very, very important. It's huge when you're building these relationships, right? Deposit funds. When you go open up a business bank account, you need to take some form of funds with you. Now, the more money you take with you, the better. But at minimal, you don't have to have a whole lot. I typically say at least take $100. Now, the way that I would do this, if you only had $100, right, that's fine. Let's say you only had $100 to put into the account. You don't want to go to the banker and say, hey, all I have is $100 to put in this bank, when you're going to end up trying to request 5,000, 10,000, 20,000, 50,000 plus in funding. Not a good look. So what you want to do is you will take $100 cash with you. And if it's your only $100 you have, you're not going to tell the banker, hey, that's the only $100 I have. You're going to take $100 cash with you, and you're going to say, hey, I only brought $100 cash with me. I'm going to use that to make the initial deposit in my account, right? Same thing. You're saying the same thing, but a whole different perspective when it comes to the banker, right? And again, you want the banker to advocate and notate your account properly. So all these things matter. You want to have your personal ID. You want to bring all of your entity documents so that you can verify you and your businesses. Now, best practices. I emphasized this previously. Keep it short and direct. You are experienced. You know about explaining what you and your business does. If you don't know that today, get in the mirror and practice it with yourself until you can say what your business does, what you do in 2 or 3 sentences. Trust me, if the banker needs more information, they will ask. You give the information they need, and that is it, right? You don't want to say too much because you don't want to say the wrong thing, or you don't want to seem like you're inexperienced when you're communicating with bankers. Now, number 2, focus on long-term relationships. What does that mean? Especially in 2026. Give me just a couple seconds. Especially now, bankers are prioritizing applicants who want to build with them for the long term. How do you build a relationship? You have accounts with bankers. You open checking accounts, you open savings accounts, you have credit cards, mortgages, auto loans. All of these are products with bankers or with banks. You want to, every time you talk, it's not about, again, it's a give and take. You don't want to talk and it's all about give me, give me, give me, because you're not going to get anything. You want to say, hey, I'm focused on learning how your bank works and how I can use your products, because this is where I'm looking for my business to go over X amount of time, right? Very important. The next part, show up early. Bankers are on a tight schedule. You don't want to show up on time. You want to show up early because it shows professionalism, and you want to explain your business in a low risk category. This is why you want to keep it short and direct, because you don't want your business to seem illegitimate or fraudulent. You want your business to seem legit, like you do it every day, like you work it, like you explain it, like you are a real business owner, right? Very important. What to ask. This is what's going to separate you from every other person who walks into that bank and talks to that banker. So remember, there are 3 major credit reporting agencies that we're going to talk about. We're going to talk about TransUnion, Experian, and Equifax. Now, most applicants believe that all banks pull from all of the same credit bureaus. They think that they pull from all 3. That is false. Now, there are certain banks or a few banks who will pull all 3 credit reports in consideration for the application, but most banks will pull 1 or 2 of the 3. So it's important. So let's say, for example, let's get really strategic. So if you recall earlier, I stated that TransUnion, Experian, and Equifax are individually privately owned companies, right? So when that happens, the information that's reporting on TransUnion or one of the bureaus might not be reporting to the other. So let's say, for example, you're an applicant, or I'm working with an applicant, and let's say they have a really good TransUnion and Experian report, but for some reason, they've got some negative information on their Equifax report. So it's important to know that, because in this priority, you want to prioritize banks that are only going to pull the good information from your good bureaus and not going to pull the information from the other bureau, right? I hope that makes sense. Now, how do we understand this? Well, how can you understand this is when you're in the bank, you want to ask them, what credit bureau do you pull for whatever product you're looking for? Because they're going to tell you. So in this example, Let's say I'm an applicant and I've got a good TransUnion and a good Experian, but I've got some kind of collection or some kind of negative information on my Equifax. If the bank says they pull Equifax, then I know ahead of time, hey, this ain't the bank for me, because I want to prioritize banks that have the good information, right? So again, there's a lot of different ways that this can get very strategic. Wish I had more, more time, but we could go into strategies and I'd be talking for hours, right? But this is an important question that you want to ask the banker. The second question you want to ask them is, can you apply for multiple products? Because most people believe, hey, I go in, I submit an application, I get an inquiry, and I can only apply for one product. Some people don't realize that you could have got multiple products from one bank with one inquiry. So for example, on the personal side, you might go to a bank and you might could get a credit card and an auto loan, or an auto loan and a mortgage from one application. Or on the business side, we were talking about earlier, hey, a business line of credit and a business credit card from one application. And not by knowing this answer to this question, I see a lot of business owners leave a lot of money on the table because they don't know to ask this question. The third question you want to ask is, what documents do you need? Hey, I'm applying for a business credit card. I'm applying for a business loan. I'm applying for this. I'm applying for that. What documents do you need? Because again, you're going to prepare those ahead of time so that you can save time for you and the banker. And then the last question you're going to ask is, what's the timeline? So different banks have different underwriting. Some banks, you can apply for products immediately. Some banks, however, have a certain time period that after you open the account, they want to see that you're serious about building that relationship. They might not let you apply for a product for 3 to 6 months from now, right? So when you go to a bank, it's important that you understand what the timeline is to apply for those products. Because if I'm someone and I want to get funding in a week or a month or so for what I'm working on, if I go to a bank and they say I have to wait 6 months before I can apply for their product, well, I know ahead of time that is not the bank for me at this particular time, right? And again, a lot of business owners make these mistakes. I know they seem so simple because I'm giving them to you now, but I'm telling you from experience of working with a lot of banks and a lot of business owners, these kind of questions can save you a lot of heartache and a lot of disappointment and a lot of frustration ahead of time if you know this going into this. So this is really like a cheat code, understanding this. Okay, I don't know why lately, but my presentation has been giving me some issues when we get to that particular slide. So it might not look as clean. It might not look as clean, but you should still be able to see my screen. If you can see my screen, I want you to do two things. Do me a favor and just type 1 in the chat. Okay, what is the low risk category? Deborah, great question. Hold that question until the end, and then I will answer that for you. Now, obviously, you can see my screen, so I'm glad to see that. Again, I like to get some feedback. If this has taught you something new today, or if you're finding this valuable, do me a favor and type win in the chat, because I like to know. Again, I don't like to just hop on here and run my mouth for a long time. I want you to actually get good information and be able to execute on this information, right? Thank you. I appreciate all of you saying win. All right, so now I want to show you some different strategies on how this is actually applicable and how this actually relates to real life, right? So I want to show you everything I've talked to you so far is about setting the foundation so you can put yourself in position for funding. So I want to show you 3 case studies from different scenarios from, again, there are different business owners start and operate in different areas. I just want to give you different perspective on how you can actually apply this information. Now, before I show you these, I always do have to say, as a disclaimer, past performances do not guarantee future results. Again, no 2 deals have ever been the same, but I want to show you what's possible depending on where you're currently at today in your business journey, right? So the first case study that I like to talk about is my guy, Marcus. Now, the reason I like Marcus is because he is a true testament of it's not where you're at today, It's where you're going after you actually apply this information, right? So the reason I like this is because Marcus came to us as an aspiring entrepreneur. He didn't have the business set up. He was trying to figure out how to get it done. He was online seeing all this information about getting funding, and he really just couldn't understand why he couldn't get access to capital. So Marcus was an aspiring entrepreneur. He started with a 590 credit score, right? So the problem was he saw all this information. He saw the YouTube, he saw the TikTok, he saw the social media. He saw, hey, go to this bank and get 50,000, go to this bank and get 20,000, go to this bank and get 100,000. And he was just like, hey, I'm gonna go to that bank and I'm gonna get all this money because somebody else said it. He didn't have access to the information that you got today, right? So the problem was is that he was denied for multiple banks, ultimately thought funding wasn't an option, started to get discouraged, started to think that, hey, funding isn't real. It's not possible. The banks are out to get me. I'm never going to get access to capital. He didn't really understand why. Well, he had some outdated addresses. He had some high card balances, and he had some late payments that had to be addressed. So just like I said, he didn't think funding was an option. So what we did was he came to one of these classes, went through the process. We helped him identify the exact denial reasons, help give him the resources to clean up his credit, lower his utilization, and build positive reporting accounts. Now, of course, it's not an overnight thing. It's a process. But when you implement and follow the process, it works. So once he did all of that, we were able to structure him, go to the currently number one bank in the United States, Chase Bank, and get a $75,000 approval. That particular product had a 0% interest for 12 months that he was able to leverage $75,000 from one bank at 0% interest, and he was actually able to launch his business. So he launched a mobile detailing business. He was able to invest in the marketing, bought equipment, all without having to use his savings when he initially thought that funding wasn't real, right? He hated when I talked about funding because he's like, hey, that's not real, that's not possible. And he now went through the process and understood what actually happens when you apply this information, right? Number two, we're going to talk about my guy, Michael, because sometimes you already have a great business. You already have a great credit. You already got a great business. You just got the wrong relationship. You don't know which bank is actually going to facilitate your business, right? That's the situation with Michael. He already had great credit. He already had the business. The problem is that he banked with one institution and assumed that years of loyalty would get him the best deals. What was happening was he was getting low offers for his business, and he was trying to actually do an acquisition. So what we did was we said, hey, Michael, you just have to understand, I'm not here to compete with your bank. If you got a great bank already, that's great. We're not here to compete with your bank. We're just here to help you understand that not every bank qualifies you the same way. And all we have to do, there's nothing you have to do differently. All you have to do is just go to the right bank. And so all we did was just position his request, match him with a lender. And when you look on the right side, some of the screenshots along with this, he was approved for a little over 300,000, like 350, 330, 350,000. He actually ended up accepting only 300,000, but it's a testament because he was going to his bank and he was like, well, the banks are out to get me. They don't want to help me. I've done all these things. I process all this money. I built all these relationships, but I can't actually get the funding that he's looking for. And sometimes it's something as simple as just working with the right bank, not changing anything else, but just working with the right bank. And again, this is why relationships matter, right? And then the last success story that I like to use is my guy, Eric. Reason I like Eric is because I'm personally someone who likes to turn non-believers to believers. And the reason is because when a non-believer becomes a believer, they only learn through experience. And then they can be a testimony, right? This is why I love Eric. Eric was, in my opinion, the poster child, the poster boy of banks are enemies. They're out to get me. debt is bad. I don't want anything to do with it. I hate funding. I hate the banks. I don't want to do it. Right. And ultimately, Eric was a 10-year entrepreneur, completely self-funded. If you're an entrepreneur, if you know an entrepreneur and they've lasted in this process for more than 5 years, they've overcome a lot. If they've been in, the process of being a business owner and an entrepreneur for 10 years, they've seen a lot, they've overcome a lot, right? So that's a major testament. The problem with is that Eric is that he thought bank loans meant that he was losing control of his business. He heard that debt is bad his whole life, right? So he bootstrapped everything. But ultimately, what happened was things were transitioning, things were changing, and it was ultimately starting to burn him out and slow his business. So all we did was help him understand that, hey, banks are not your enemies. They're just what I talked about earlier. They're in business to lend money. You just have to know how to leverage them. And when you know how to leverage them, excuse me, you can actually use them as investors for your business, but you have to know how to speak their language. And that's something that you're here today learning, is how to speak the bank's language and how to actually position yourself for access to capital. So all we did was we structured his business. We helped him build business credit in the business name. We were able to go and get 2 products for his business. Now, if you look over here to the right, this is why I love this testimony. When you look, the first one says a revolving line of credit for $50,000 and a business credit card for $40,000. So this is why I like this. Eric was someone who was a non-believer. It's also a testament to that. Remember how I said earlier, asking the bank if you can get multiple products? And I mentioned how so many business owners leave money on the table just because they don't ask or know the answer to that one question. So let's say you were Eric and you went to this bank and you said, hey, I want a business line of credit, or maybe you wanted both, but you only knew to ask for the business line of credit. So the 50,000 would have been great. You would have been extremely happy for it. But it's a little different when you realize you would have almost left almost double the amount of money on the table just by not asking that one question. Eric didn't have to do anything different. Paperwork was the same, application was the same, business was the same, but he was able to go to one bank and get $90,000 from one bank just by understanding the questions and process that I've taught you today, right? So he was able to get $90,000 in product. $90,000 in funding. He was able to launch a second product line. He was able to hire a new marketer and help expand and grow his business, all while protecting his personal assets and by learning leverage instead of begging, right? If you haven't learned anything today, the number one thing I want you to know to this: funding isn't luck. It is a system. And when you follow it the right way, when you know what to ask, when you know what banks to go to, and in what timeline, it is a system and it produces predictable results if you follow what I've taught you today. The clients that you saw in those case studies, and this is why I like them, because they talk about different backgrounds for where you may be today. They didn't get lucky. They followed a proven strategy, which is the same exact one that you're learning here today. They had a roadmap. They knew which banks to approach and when, and they understood how to structure their credit and their business to qualify. This is the power of a real playbook. And this is why we call ourselves the funding playbook, because we structure the game plan before we start the execution process, right? Now, we learned a lot today. So I just kind of want to summarize this in really a 4-phase process. So phase 1, you're going to clean and align. You want to pull and review all 3 of your credit reports. You want to make sure that your name and address matches everywhere. And if you currently have negative remarks, you want to go through the process to clean that up. Phase 2, stabilize and prepare. You want to pay down your card balances. You want to make sure that that business bank account is open, and you want to gather all of your key documents. Phase 3, you're going to verify and plan. You're going to identify your strongest reports from phase 1. You're going to map out which banks to approach first, and then you're going to go through a process to get pre-qualified, and then you're going to phase 4, which is ultimately executing and reviewing. So you're going to apply in a smart sequence. You're going to log the results and adjust. And then now you have the ability to plan for multiple rounds of funding, right? Now, what do you actually need to qualify? Touch base on this earlier. There are 3 C's when we look at capital. There's credit, cash flow, or collateral. Credit is strong enough personal credit and or business credit. Cash flow is strong enough business revenue or personal income. And then you have collateral, which again, you can put up collateral like an asset. Maybe you have a car. Some people put up houses. Some people even put like portfolios. We work with a lot of wealthy investors. And instead of them doing things like maybe they have large stock portfolios or large investment accounts. Maybe they don't want to sell that. For some of the clients we work with, maybe they don't want to sell that to incur some taxes. So maybe they start to borrow against it so that they can actually still access that capital without actually enduring, other penalties for that, right? So there's a lot of creativity that you can get whenever you actually understand multiple ways and how to use credit, cash flow, and collateral in order to access capital. Right now, credit-based qualifications, typically, again, I hate credit scores. It's more about the profile, but just generally speaking, you would need a 680 credit score for the relevant bureau. You want at least one major credit card. Major credit card issuers are issuers like Visa. MC stands for MasterCard. Amex stands for American Express. You really want a 1 year plus old card with a $2,000 limit. Now, with those 3 things, or with those last 2 things I just mentioned, you can access capital if you don't necessarily have those. It's just that we have to realign the expectations of what the expected amount of funding would be, right? No derogatory remarks, no late payments specifically within the last 12 months, no more than 3 inquiries within the last 6 to 12 months. And then again, you want your card balances between 1 and 30% at the time of application. Now, what do you want to bring with you when you're looking for funding? Your personal ID, so your driver's license, proof of address so that you can verify you. You want to have your EIN letter from the IRS. You want to have the articles of incorporation, and the OA stands for operating agreement. Certain lenders will ask for an operating agreement. An operating agreement is just a document. It's more of an internal business document, but it talks about how the business actually operates. Your business bank statements, if applicable. And then again, you want to have a short explanation of your business and your use of funds. Now, what's next? You've completed this. Congratulations. You are more educated than a large majority of the applicants that are out there. And we have gotten rid of all of the BS and all of the misinformation that's actually out there in the market. So what is next? Excuse me. You got 2 options. You can take what you've learned today and you can go and do it yourself. And if you do, just like I mentioned, you'll be better prepared than 99% of the people applying for funding. Now, or we understand convenience. We understand sometimes people can be a little overwhelmed to do this on their own. Sometimes they just want speed and confidence, right? So, or you have the option where you can let our team guide you every step of the way. We can create the personalized audit. We can create those custom funding sequences for you. We have a full support staff with expert strategy, structure, and support to guide you every step of the way. And then you get access to our proven network, our resources, and all of our data over all of the banks that we work with, right? Regardless of which process that you go with, you now have an actual roadmap. The only question here is really, how fast do you want to move? Do you want to go through the process to do it yourself? Or do you want to go through the process to leveraging our team in order to do so? Now with me, again, when you work with me, I like to cover everything up front. So if you do decide the convenient route of coming to work with us, what does it actually take to get started? So something that I want to clarify is that Christina and 7 Ways, they're going to put a link in the chat. That link in the chat is going to allow you to schedule a free consultation with our team. And at least during that consultation, you'll be able to understand either what position you're in, whether you decide to move with us, whether you decide to use our services, or whether you don't, right? So that is my gift to you today. When they put the link in here, you get a complimentary audit that you can use so that you'll actually understand what position you're in. Now, that's complimentary. If you decide that you want to work with us, I want to explain how our process works, right? So, our model is performance based. This is a team effort, and we are very intentional about who we work with. And what we found is that clients who decide confidently, move quickly, and stay committed to the process actually get the best results, right? So, how does this work? If you are qualified and if you decide to move forward with our services, then we would offer you the opportunity to work with us. In the event that is the case, there would be a $500 deposit. Now, something I always like to clarify, that is non-refundable, but it is credited towards your total amount of funding. So it's not an additional fee on top of the funding. It's credited towards your funding once you receive funding. Right now, just like how I just said, it's not an extra fee. It really activates your file and covers the work that starts from day one. Just like how I mentioned earlier, all of the work prepared for funding is done before we ever submit the application. So there's a process for onboarding. You have a client portal set up. There's a lot of training. There's a lot of resources. You work with me and my team a lot in a one-on-one capacity. It allows for the support access, the file review, the preparation, and the funding strategy, right? So that's what gets you started if you decide to move forward with our services. And the way that we work is, again, this is a performance model. So the way that we work is the more success you have, the more success we have together. So the way we operate is on a 10% performance-based success fee, which is paid only after you've been funded. So there's no retainers, there's no guesswork, there's no risk beyond the deposit, and we work with you through getting you funded. Now, remember, why it's actually built this way and why we do our model like this is because the deposit makes sure that the clients entering the process are actually serious and committed, and it reflects the value, time, and infrastructure that our team provides from the start, really from day one. And then the 10% keeps our initiatives, our incentives aligned with yours, and we only earn the rest when you do, right? So again, we move strategically, we keep the process organized, and we position you for funding with confidence by leveraging our expertise and our resource. So as mentioned, Christina in 7 Ways, they will have a link. You can go ahead, you can click that link, and you can go ahead and take the first steps to get funded. Like I said, my gift to you today is that the initial audit, the initial consultation, you don't pay for that. That is a complimentary audit to help you understand where you are in the journey and what you may potentially qualify for, right? So go ahead, click that link and take the first steps to get funded. Now, again, everything I do, I like to make sure that you have those expectations set ahead of time so that you have the best experience possible. So when you do that, when you fill out the information on the link, immediately check, well, first of all, make sure your email is spelled correctly. Please double check, please triple check. Assuming that your email is spelled correctly, once you do that, check your folder immediately for a confirmation email. The reason is because it's going to have some videos in there for you that I personally shot. It's going to set all of those expectations for you, and it's going to help you understand what is about to happen through the process. When you work with our company, everything that happens, we pre-educate you and set those expectations before they happen. So you know everything that's going to happen before it happens so that you have the best experience possible, right? Now, the other thing you're going to get is you're going to get a text. The email is for educational purposes for you. Please understand we are primarily a text-based support team. So understand the email, let me repeat that. The email is for you. Do not email us back. It will take the team a long time to get to you. We are a text-based support team. So yes, when you schedule your appointment, you'll get text and email confirmations. When you get that text, there is a team member on the other side of that text message that will communicate with you. If there are any updates to your appointment, if there are any questions, please communicate with the team via text, right? There is a whole system behind the operations for that. Now, understand, we service a lot of clients. Someone will text you back. It will probably not be immediately. Responses can take 3 to 24 business hours, and our team will review and respond to you in the order that they are received. Now, what's happening is you got blessed for the free call. So what you're scheduling is an intake call. You're going to schedule a one-on-one with someone from our team who's going to walk you through one-on-one how to get your credit reports, how to get your business information, and help us understand it and review the information to understand what first steps you need to get funded, right? Let me set those expectations. The call is scheduled for 30 minutes on Zoom. No, you cannot do it from the phone. Yes, you need to be on Zoom, right? Very, very important. Next, you must show up on time. We are a professional consulting firm. We expect all of the clients who work with us to be professional. We run a very tight schedule. We assume that you run a very tight schedule. We want to be respectful of your time. We ask that you be respectful of our time. You must show up on time. There is no if, ands, or buts. If you are more than 3 minutes late to your appointment, you will have to reschedule your appointment, right? So to avoid that, please communicate with us ahead of time if you have to reschedule, or make sure that you show up on time for your appointment, right? Yes, you must be at a computer. The team, and we're going to be walking you through how to upload and download documents. If you don't know, sometimes the way that things work on a mobile version is not the same way that it works on a desktop version. So to have the most seamless, streamlined experience, yes, you must be at a computer. And yes, we are looking at business funding. So you will have to be willing to share your personal and business information with us. Please have that ready. So again, that we can get through that process as fast as possible. Now, try to move as fast as possible. Try to cover a lot in the allotted time. But of course, at the end, I do want to make sure that I leave time for Q&A so that I can answer your questions, address any concerns that you may have. So what we like to do, if you would like to ask a question, please raise your hand at the bottom of your computer. I'm sure Christina has, you raising hands all, throughout the week. But at the bottom of your computer, there'll be a react button. You can raise your hand. Please raise your hand if you have a question, and then I will call on you one at a time. Now, for questions, we do want to be mindful of everyone else's time. So what I ask is, when you come up, ask one question, 2 questions max. And then if there's no other, hands raised, then you can ask more questions. But I do want to make sure that I give as much time as possible to address as many questions as I can. All right, I don't see any hand raised as of currently. I did see a couple questions in the chat, so I'm going to work my way back up and ask those questions. Stuart, you actually went ahead and raised your hand. You can actually go ahead and unmute and ask your question.
Hey, good afternoon, brother Dorsey. How you doing?
I'm good. How are you?
Doing pretty good. Yeah, so I've been acting on the information that we had spoke on the last time. Like basically in the snapshot, my situation is that I had a bankruptcy that's falling off in March 2027, and I was supposed to have some liquidity coming my way to that I was going to use to try to do a secured line of credit for my new businesses that I started, 2 LLCs.
Right.
So I was able to start a relationship with a business banking specialist at the bank is Bank of America. Okay. And so I kind of asked him how to structure everything, to best get to have a best chance at trying to get the secure credit card, based upon what my situation is today, rather than starting with you guys trying to trying to get the, trying to go through your program and all of that. And I know I still got this bankruptcy. I need to really wait till that fall off. And then I also got like high utilization too.
Okay.
My credit cards, but everything, I got all my 100% payment history on time, no derogatories. No, I haven't been applying for credit, any of that. So, I'm kind of set up in a good position. So, okay. So my first question is, I've worked on setting up my websites. I basically got, some nice landing pages or whatever. Gonna get the the executive office, like you said, do. Going to use the NICS codes that we talked about. So, as far as the NICS codes, I had came up with a business explanation. So I'll just give you an example. One, I just want to see what your thoughts is on it. Business explanation for my NICS code 541618. Business consulting services not otherwise classified. I consult on economic analysis processes and educational training for established multifamily investors. They pay me for financial modeling, payment systems, continued education, and portfolio strategy.
So perfect. The only thing that I would take out of that is the financial part, because then they'll try to treat you as a financial services company. So everything else was great. I would just take out the, financial part of that.
Okay, gotcha. And then like on the website, I had put like housing solutions, because I had basically modeled my website off of somebody that buy properties and have a portfolio on there. But of course, I don't got like no portal for residents to log in, and of course, I ain't got no properties yet. So I had just put like a tab that said "coming soon" on it, kind of thing. Is that's still vague enough where it don't look like I'm just doing real estate instead of servicing it?
So it's okay. Depending on the banker, they could possibly perceive that. So what I would do is say that you train the systems. You provide the systems for those business owners or for those investors to operate. So you're more of a platform systems guy instead of necessarily working directly with real estate investors. Does that make sense?
Yes, sir. Gotcha.
That's how I would position it. You want to position yourself to be the platform, not necessarily the one that actually does it.
Okay, gotcha. And then the next problem I was running into, because I'm trying to get these bank accounts opened up soon, and then like I said, if I get this liquidity, I was gonna go ahead and try to apply for a secure credit card, even though I know 100% of my stuff ain't right, but I got a lot of stuff that is right. And then if they say no, then I'll just still come pay you, and do it once the stuff fall off anyway. So I didn't think it was a big deal. But I got when I set up my LLCs, it actually came with what they call banking resolutions, which I'm sure you probably heard of. And so, now I got an operating agreement. I didn't have none of that the first time I tried it. And like I said, I failed miserably, but this time I got professional help. And now, so I got those tools. So I'm trying to figure out, how do I use the banking resolution? Because he kept the banking specialist that I got the relationship with now was saying that they got to use my personal address to verify, because, I got one LLC that's a Wyoming, and then the other two are state specific LLCs. And they like, oh yeah, we need to be able to verify you personally. And he was like he was kind of almost trying to steer me away from using the executive office address. And I'm like, nah, my man said to use the executive office address so it look professional, but I don't want to be putting my personal name on there too. What would you advise on that?
All right. So phenomenal question. So the Wyoming business, every state has to have a certain reason why you operate or set that entity in that state. So understand, anytime you have the Wyoming business, it is going to be typically harder, or it's going to have other verification, because Wyoming is one of those states that doesn't put your personal information on public record. So because of that, remember how I said your business and you have to be easily verifiable. So Wyoming is not one of the best states for banking or funding. It's a good state for asset protection. So you have to be aware of these things when you are opening up your business. So with the Wyoming LLCs or Wyoming businesses, yes, that will happen more often because they actually can't verify you from public record. So Wyoming entities for banking purposes would raise or potentially raise a red flag. So that's the first thing. The second part is that the most bankers, remember, when you go through what I'm teaching you today, you're going to really know more than a lot of bankers that actually work at their lending bank, right? So it's important to understand that, because they might make an assumption that an executive office or an executive suite is a virtual office. A virtual office has gotten a bad name in the industry because a lot of people will go to one virtual office and it'll be that one address, but it'll have like a different suite number. This is why you want to use an executive suite or an executive office in the state that, or in the city and state that your business is actually set up in. That's how you would bypass those, because it's not a generic place, it's where your business is actually set up. The third component to that is, again, when your business is set up on public record, most your banker will understand you not wanting your private information being on public record. So sometimes that will come up, and the reasonable response to that is say, hey, that's perfect, but the reason that I have my my business set up with the executive office or business address is because my business is growing, and I do not want the personal liability of my address being on public record. So I have safety concerns if my address was on public record. So those are the three answers that I would say to your question. Does that make sense?
Yes, sir. Yeah. Just one last thing, and I'll let you go to the next person. I'll raise my hand again if I need to.
Okay.
So with the banking on I'm trying to get credit on the state specific. The state specific are Ohio LLCs versus the Wyoming. Like, I was really just, that's just a scapegoat entity. It ain't really gonna have no activity in it. So. Right. I'm trying to get the credit on one of the Ohio LLCs. And when he was saying that, like I said, I got these documents that, these resolution documents, and I was trying to see, like, on that, should I be putting the executive address on there, or should I be using my personal address? Because like the Ohio LLC is owned by the Wyoming LLC. So,
got you.
I'm trying to figure out the best way to go about it.
So I would have to see how it's structured. But with me, the simple solution is go with whatever is reporting on the Secretary of State. That's what I always go with, because that's what's verifiable in the state entity. But again, I don't know what a lot of this comes down to the operating agreement and how the actual operating agreement is set up. Because again, if the information is from a Wyoming business and it doesn't have your information on there and it's set up under the business, then yes, they're going to want your personal information there, because they can't verify you through Wyoming. Because if they trace the Wyoming business from Ohio Secretary of State to Wyoming, anybody could own that. They can't actually trace it to you. And again, that's going to raise a red flag to the bank, because they don't want to deal with potential fraud. That's why I say that you have to be verifiable for you and your business.
Okay, yeah, because I'm using the registered agent addresses on them too. So I ain't, like, my name ain't on the paper at all, you know what I'm saying? And then the Wyoming LLC is owned by my trust. I made sure I changed that on the operating agreement that the trust is 100% owner of it. And so yeah, I'm just trying to limit, because he keep telling me, like, yeah, man, we're gonna have to use your regular address, and then after we apply for the loan, we can change it back to your executive address. And I'm just like, well, that don't even really sound right. But then I found out about these resolution documents, and it said it was supposed to, like, confirm my identity.
Yes.
So, like, on there, it says that my Wyoming LLC is the member.
Right.
And, but it had my personal address, because at the time I didn't have the executive address yet. Mm-hmm. So I could still edit that document before I take it to the bank. And I'm just trying to figure out, should I put the executive address there, or should he does actually need my personal address just so he can verify me, and then I can change it back to my executive address after I get approved for the loan?
I don't see your paperwork. So, but like I said, for me personally, I always default to what is on the actual Secretary of State. And then in the operating agreement is where it's the extra document that, depending on how your operating agreement is set up, it would give you authority as an and authorized representative of the business to actually open up the account. But I can tell you, like I said, if it's Wyoming, it's going to give you a lot of problems for verification because Wyoming is not a good banking state. It's a great asset protection state, but it's not a good banking state because it's going to raise a lot of red flags because you're not going to be able to be verified.
Okay, I understand. So yeah, I still got some work to do on it, but I appreciate your help, man. You put me in a better position than going at it blindly. For
Love
sure.
to hear it. Love to hear it. That's why we show up.
Yes, sir.
All right. It looks like Isaac McAllister is up next. You can go ahead and unmute.
Hello. I got a question because I had got hit with a late payment from from kickoff that I had for like 4 years or whatnot. But I didn't even really need them no more. But I forgot that it kind of was on there, and then they dinged me, but I still was able to get approved for a credit card and stuff on the personal side. And I got one business credit card.
Okay.
And I was wondering. Now you said I need to wait at least 12 months to before for the late payment.
Yeah, minimally. So, two strategies that we typically deal with this. If the kickoff account is still open, excuse me.
I closed it. I
Okay.
closed it because they kind of pissed me off. I tried to do a like a goodwill, like I tell them like 4 years. I've been with y'all 4 years. I never missed one, and this time it happened, and they just weren't having it.
So, two parts of that. Goodwill is a good strategy. The question I have is, did you ask like general customer support that, or did you actually send in like a letter for that?
Yeah, I sent in a letter for
Okay.
it, but they kind of wanted like more like evidence of why or whatever. And I was like, I mean, ain't no evidence of why. So they was like, well, we need that. I mean, I guess I could have exaggerated it and kind of made up some like bull crap, but I didn't do that.
Look, I'm just gonna say you got Chat GPT. If you had a real scenario, you can explain that to Chat GPT or whatever, these bots out here and help you create a scenario that is actually applicable to your scenario. So I would definitely say try to goodwill a couple times. The alternative is if you know credit repair, or if you know how to do credit repair, or if you know a credit repair company, if the account is closed, I mean, me personally, if the goodwill, I can only say for me personally, if I was in your situation and I tried the goodwill and it didn't work, and if I know credit repair, or if I had access to a credit repair company and it's closed, I would just dispute and get rid of the whole account. Because again, I'm always thinking in terms of time. Do I want to wait a year or the rest of the time that it takes for this year late payment to clean up? Or would I just rather go through a credit repair process, dispute this whole account based on inaccuracies, and then if I can get that removed, now I don't have to wait X amount of time to get to a year. I can do this right now. So those are the ways that I would look at it. But like I said, I mean, goodwill is a valid strategy. It's just that sometimes it takes a little pressure or a little extra work. But again, the way I always look at things personally is I'll do the extra work now, or do what I have to do now, so that I don't have to wait a year, even if it's frustrating or annoying, as it can be. But I just want to I'd rather spend the extra couple hours, week or so, in order to get over this hump, and then I can actually move on to the next phase of my funding process. That's how I would
Okay, yeah.
do it.
Yeah, that's kind of why I closed it too, because I was like, I'm just gonna try to just get rid of the account altogether. I don't really know how to do it personally, so I got to just try to get somebody to try to get it off of there. But I did see that I still can get approved for personal credit.
Yeah, so sometimes you can't. Well, how long ago was that late payment?
Uh, it was I think it was March. I think they put it on there like it happened in March,
Okay.
March or April or something like that. So, like it brought my uh uh payment history down to like 90, well, it was like 95 or 96 when it first happened, but
Right.
now it's up to like 99. So it's almost like 100% again.
Yeah. I mean, again, there's going to be different lenders. Like most people are used to like major banks. There's going to be national lenders. There's going to be prime lenders. There's going to be different alternative lenders. So it's not to say that you can't get funding depending on what lender you go to. It's
Yeah.
just to say that if you want the most options, yeah, that account needs to be removed, or the late payment needs to be updated, or you're going to have to wait till that like year mark. Those are
Yeah.
pretty much, yeah, those are like the most flexible options. So again, it's not saying that you can't get funding. It's just you're going to have less options than if that account was removed or that late payment was actually updated.
Yeah, I took a big risk because I applied for a Chase card and I got it though. They gave it to me.
Okay.
So
Like
yeah,
was it like a decent limit?
yeah, it's for 13.
Okay. Okay. That's not bad. That's not bad. But on the business side, if you want to transfer to business funding is going to underwrite you a little bit more stricter than personal.
Okay.
So
Okay. So
you
yeah, I'm
won't,
gonna look to get that removed then.
yeah, because it's almost like even for like bankruptcy, right? So like Stuart kind of mentioned this, like even for bankruptcy on like the personal side, we've helped clients get products like a year after bankruptcy, like start rebuilding their personal credit a year after bankruptcy. But it's not going to happen on business side. Like we've helped clients a year after bankruptcy get personal credit cards, personal loans, things of that nature. But over on the business side, it's just not going to happen. The personal side just underwrites a little bit differently than the business side, because again, the personal products are going to report to your personal credit report. Business and the financial system knows that most business products are not going to report to the personal credit report. So they just want more transparency. And that's why that's why the system is built to be harder to get business funding as compared to personal funding, because personal funding is going to show up on your, personal credit report.
Okay, thanks.
Of course. Any other questions? Okay. All right. It looks like Pete Peterson was next in line. You can go ahead and unmute and ask your question. You're still muted as of currently, just in case. Let me see if I can help you out. You should have just had a notice come across your screen to help you unmute.
Okay.
There we go.
Can you hear me?
I can hear you.
Good stuff, Mr. Dorsey. Appreciate your help. I was trying to run up here, so I'm going to talk fast so my phone doesn't die.
Uh-oh.
Yeah, I had to hop off, so if it's a repetitive question, forgive me on this one.
That's okay.
Number one, I didn't get your intro. I'm sharing you with another team meeting. Are you a direct lender, sir?
We are not a direct lender. No, we are a consulting firm, and we have relationships with traditional banks, alternative banks, private lenders. There's really not an area of financing that we don't have relationships with. But no, we are not a direct lender ourselves.
Okay. And you mentioned, were you able to drop in the chat the platform for the business phone lines?
Yeah, I'll write that in the chat right now. It's call 8. That's call with a K and then the number 8. Call 8.
Okay. And so you're a broker. So I need to find out, how do you actually examine different business strategies? So you said you like to purchase maybe existing businesses or LLCs, or when you start going through all these financial products, we give you the scenario, you look at what we have, you tell us what we're appropriate for, or how does that work?
Yeah, so basically, whenever you inquire for our services, there's a request, right? So you'll put in a request for what you're looking for. And then basically, what happens is we compare your request versus your personal information or the business information. So we try our best to get the request as close to possible. Now, sometimes in full transparency, the easiest way that we say this is if it qualifies, we can fund it. But sometimes your request may be different. Oh, I think we lost him, but I'll go ahead and and actually answer this question for him later. Sometimes what someone requests versus what they actually qualify for oftentimes are two different things. So our job is to review all of that information and let you know and realign your expectations of with, hey, what you requested is possible with your current scenario, or your request is not in line with what you currently qualify for. So in addition to that scenario, sometimes what you request might not be possible right now, but it might be possible over, let's say, a period of time, maybe a couple months, maybe a year, where there's like different segments or different sequences or rounds of funding or strategies in order for you to get to your overall objective. So I think we lost him because his phone died, but at least he will have that for the recording. Now I'm going to run back through the chat. Of course, if anybody else has any questions, you can raise your hand. I'm going to try to catch up on the chat for a couple of minutes. Let's see. Choose the credit profile. Okay, perfect. Let's see. Can the business phone be a VoIP? Yes, it can. Call 8, the resource that I really put in there, that's basically a VoIP. A VoIP means voice over IP. Another one that we use a lot as well too is something called Ring Central. We like that a lot as well too. But yes, you can use VoIPs. You are all welcome for the information. I'm glad that y'all enjoyed it. I appreciate the information. Awesome. Boss Your Life Up. Funding foundation is so important to accessing the most funding. I literally have access to 500,000 just by following these exact steps as a brand new business owner. So he did not work with us, but that is amazing. Congratulations. Thank you for saying that, because that is a massive testament to the fact that this actually works when you implement what we talk about. What is an H corporation? Aged corporation. Okay, yep. Boss Your Life Hub hopped in there too. Awesome. My favorite 0% credit cards. Awesome. What apps? So Tony Jackson said, what apps that you use to get money off of different CCs into your business bank account? So there are a couple different platforms depending on if you're paying contractors versus if you want money directly in your bank account. So if you're using it, like if you're paying contractors or you want to send a check to someone, what we typically recommend is either two platforms, either a platform called Plastiq, that's Plastiq, or a platform called Milio. The other thing, but to answer your question, Tony, if you want business straight into a business bank account, there are companies out here and they offer what are called liquidation services. And they are professional companies that are actually set up to liquidate cards, and then they transfer that money to your actual business bank account. That is not something I recommend doing if you're not familiar with doing it yourself, but I would recommend it if you do work with a legitimate liquidation company. An alternative strategy on like a smaller scale, this is not telling you whether it's right or wrong for your particular situation. I just want to give you different options. So what we've seen business owners in the past do, let's say this is a business owner and they have a friend, right? So let's say their business or their friend owns a business. If you trust them, key point is trust, they could send you an invoice. What we've seen them do, or clients do, pay that invoice. The money would then go into the business bank account of their friend or their person that they trust. Once the money settles, then they can send that back to you. Not saying that's right or wrong to your particular situation. I'm just saying that's a more peer-to-peer strategy if you, for whatever reason, don't want to use a liquidation service. My personal recommendation, anytime we do it, anytime we send our clients, it's always a professional liquidation service. Okay, perfect. Let me see here. What is the low risk category? So the low risk, Deborah Talley asked, what is the low risk category? The low risk categories that I always recommend is a marketing consulting or a management consulting. The reason I use those is because regardless of what business you run, there is marketing involved in with it, there is management involved in with it. So if you are going to do a marketing consulting, and you can Google these NAICS codes on Google and it'll break it down for you. But the marketing NAICS code that I recommend is 541613. That is marketing consulting. Again, that is NAICS code or SIC code 541613. If I wanted to position my business as a management consulting company, then it would be 541618. And again, that is the management consulting. So I hope that helps. Let's see. Catching up. I'm catching up near the bottom. Faith Qual said operating agreement and what else? You want to have your operating agreement along with your entity documents. Entity documents, when you set up your business, you're going to get an articles of incorporation from your Secretary of State if it's a corporation, or you're going to get an articles of organization for your LLC. So you want to have your entity documents, your operating agreement, and your EIN letter from the IRS. Let's see what else here. I'm getting near the bottom. Deborah said, what is your Call8 partner number? Not sure what your question is. Call8 is the platform. And when you go on Call8, you can choose. The reason we like Call8 is because you can get a local business number, particularly to your state, or you can get an 800 number or an 888 number. So that's why we like Call8. Shakora Tyne said, hello, the 10% will come out of what you get the business approved for. So yes, for clarification of services, the $500 would be the start of the deposit if you choose to use our services, and then that's credited towards the 10%. And then yes, the rest of our commission comes from you. We would secure you the capital, whatever product makes the most sense for you. We would secure that product. What most clients do, they would get access to that product. Once they get access to the product, then they would use that product or those funds in order to pay the remainder minus the $500 that was credited. Boss Your Life said the banks are using home addresses for funding nowadays as the personal guarantee. That is the case for some banks. That's not the case for all of them. Depending on, it's all going to be really kind of going back to what I was saying with Stuart. It's going to be state specific. So it depends on what state your business is set up in. It's going to depend on what state your business is going to operate out in. Me personally, I don't like to use home addresses for anything that I do. That's me personally. So I don't personally use banks that require my home address. I will say since COVID, they are more understanding of there being a home address. But again, that's really going to come down to the bank that you use and then the state that your businesses are actually established in. Frederick and Mentor, ask chat first before you pay anyone. Yes. Perfect. Yeah, so Frederick and Boss Your Life Up brought some great points. Going back to the question earlier, ask ChatGPT before you pay someone. That's always going to be gold. And then Boss Your Life Up said something very valuable here. Chat will generate you a great dispute letter to get that removed. So that actually helps a lot. There's a lot of resources that you can do. You can pull in, to ChatGPT, explain your situation, and it can draft a letter. Nicole Smith said, is a virtual address through Anytime Mailbox okay? I was provided a physical address where I can actually go in, or is there a company you recommend? So me personally, I don't like my virtual addresses attached to a mailbox for banking purposes. If you're using it for like mail or certain things like that, that's fine. But a lot of those mailboxes, whether physical or online, they get flagged because a lot of users will use that root address and just have a different suite number. The more businesses that you have at a certain address, the more red flags that it actually raises to you. There used to be great virtual office companies that I used to recommend. Used to be like Alliance, and Opus, and then Regis. I do not recommend those companies anymore because, again, a lot of people started using those over the years, so they started getting red flagged. I would just go with a local company. So me personally, I live in Orlando, Florida. So I would type in Orlando, Florida, executive office or executive suite, and I would find a local business to where I'm at because there's going to be less people that actually use it, and it's going to be a lot easier for you to be verified. Boss Your Life Up said, thank you for the funding. Of course, you're welcome. Again, congratulations on the funding that you've gotten for yourself. This process does work. What is a simple use of funds? So Stuart said, what is a simple use of funds response? Great question. Something growth related. So something about marketing, something about growth, something about expansion, something that actually shows that you are intending to grow your business. So something growth related. Last couple questions. What are the names of the liquidation companies that you recommend? It is a relationship-based company, but the company that we work with is a company called Improve You for liquidation. If you try to do it on your own, they have a lot more, kind of qualifications that you kind of have to go through. But that is the company that we use, Improve You, IMPRUVU. They're also another great colleague of mine in the lending space. Nicole Smith said, is there a preference over a local number or an 800 when choosing? Me personally, I like local numbers. It builds more of a relationship when I'm building with local bankers. It also looks better whenever you call certain lenders and you're getting funding later on. And let's say you're based in, again, your city and state, and you're calling from that city and state. It just seems a lot more easier and verifiable. Some people will say an 800 number. 800 numbers to me just seem too corporate. Nothing wrong with it, again, per se, just my personal preference. I like local numbers. And then Faith Qualls asked a phenomenal question. Is Wyoming, Delaware, and Nevada somewhat the same? Yes, those are great privacy states, phenomenal for asset protection. They are not great banking states at all. So yes, they are. I will leave it. I've got like another minute or two left. Any last minute questions before I get ready to go? All right. I don't see anything else. Christina, as always, thank you. I'm glad to be able to be back in the community. I would love for all of you to, work with us, actually be able to figure out what your first steps are to get funded. If you like the presentation, you can find me on social media. I would love to, connect with you, keep up with the content. I talk a lot about funding, credit, business strategies, acquisitions, all of that, all over my social media as well, too, which you can connect with me at CEO Dorsey. So with that being said, again, Christina 7 Ways, I appreciate you all. I hope you all have a great night. I know that Christina is going to drop this recording. Watch it 2 or 3 times if necessary. Like there's a lot of great information in here that you will not find online at all. So again, I appreciate you all. I wish you much wealth, abundance, and success. And I look forward to seeing y'all soon. Thank you, Christina. Thank you, 7 Ways.
Thank you, Mr. Dorsey. We appreciate you so much. each and every time that you come on here and bless the community with all of this knowledge and with your decade of experience in banking relationships. I want to tell everybody, please come off mute and say thank you, Mr. Dorsey. We appreciate you so much. Come on,
Thank you,
come
Mr.
on, come
Thank
on,
you,
Dorsey.
come
Mr.
on, come
Dorsey.
Thank you so
on.
much, Mr.
Appreciate you,
I
bro.
Dorsey.
love it.
Yes, thank
I
you, thank
love
you,
it.
thank
So
Thank you.
beneficial.
you.
Thank
Bye.
you.
Thank you.
Yes.
Wonderful.
Thank you. So everybody, you guys need to click the link that's inside of the chat, okay? Ivy went and dropped the link inside of the chat. Go ahead and book that complimentary audit so that you can see what's the next step for you if you qualify for business funding now. Some of you guys are scared to click the link. Do not be scared to click the link, okay? Click the link to see what's your status. Where are you right now? And if you are unsure, you might have to work on something. So please, 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 let's go ahead and click that link so that we can get an audit done. So with that, without further ado, I'm going to go ahead and adjourn our masterclass. Somebody's at my door. So you guys have a good rest of your Tuesday. We do have a live Q&A session on Thursday at 8 p.m. Eastern Standard Time. So I hope to see you guys on Thursday. Come with all of your trust questions. I will be here until the last question is answered. So without further ado, go enjoy some tacos. It's Taco Tuesday. Bye, everyone. Love you guys so much.